the cover. Okay, IFRS 15 is on your revenue. The 5-step model. COPAR, right? COPA. C stands for the contract. O, identify. Okay. P is your price. What is an obligation in a contract? It may comprise of more than one obligation, correct? So we have to identify separate obligation. Normally, separate means they have their own distinct. It can be distinctly separate. I mean, goods and services are distinct. They are quite. It can be separated. Okay, we have a standalone product. Can be sold separately. Can be sold separately. So once you have more than one obligation, the next thing is we have to determine the price. P. Okay, the P here. If it's fixed, no issue. But when it's you have a variable consideration, then we have to use a lot of judgment. Okay, so judgment like this example here, the example. So if you hit more than 500 units, then you got a $50 discount. So if you haven't hit 500 units, we already have to use judgment. Okay, whether the 500 unit will be actually achieved or not. Okay, judgment. Then once you know the price, then with the obligation we do the allocation. Allocation should be based on the standalone price. Okay, if they were to be sold separately, let's say 500, 600 and 400, then the price will be allocated based on this 60-40. And recognition will be at a point in time, or it can be recognized over time. So at a point in time, remember we have the price handphone as well as the contract data for 2 years. So this one is given free, and then this one is 240. So what we do is total 240. Okay, we're going to split them into handphone and contract at their standalone price. So once you split, handphone recognized straight away, because once you hand over the handphone, you can recognize the sale. Then the contract 2 years, you have to split over 2 years. Okay, first year and second year. That one is over time. And then later, right after this, we'll be looking at the construction. Okay, because the performance obligation is over time, therefore we recognize over time. Okay, construction take 2 years, so we recognize over 2 years. Okay, and then we have these are sort of example. Warranties. Okay, when you sell with the option to extend their warranty, then it's a sale. Same thing, 2 obligations. But it comes together, then we have, when let's say when you sell, they attach together with warranty, then we have the IFRS. Cannot provision, credit side. Revenue is credit side, provision credit side. Then principal versus agent. Principal, we only recognize the commission. Okay, and some of the characteristics to identify whether is there a principal agent. Normally it is the principal, but they will determine the price, they bear the risk, bear that, everything. Okay, agents just take commission only. And remember here, when we recognize 1,000 when we collect, we pay 900 to the principal. So we don't recognize 1,000 and then 900. No, we only recognize the 100. But what if we recognize both? We minus 900, minus 900. Done. Minus revenue, minus cost. Okay. Repurchase agreement. We have ABC, right? Okay. The first one, obligation to buy back, means we have to buy back. The second one, we have the right to buy back. When it's above, we have this. This is A and B. Above original selling price is a loan. Okay. That is the asset and then back 1,000. Okay, then 1 year later, I have the obligation to buy or the rights to buy. So when I buy, I will pay back. Because when I buy, I need to pay back. Pay back how much? Above the 1,000 means, let's say if I pay 1,001, means I pay 10% more. 10% more is actually the interest. So do we de-recognize the asset? No. Okay, we do not de-recognize. We recognize the money received as a loan. This is actually a loan taken, in which the asset is used as a securities. Okay, not? If you sell below, then it's a rental because here, then I pay 900 back. So I actually keep 100. The 100 is considered as a rental. Okay, and put option is part C lah. Is a call to buy, put to sell. So it's a seller has got an option. So above, then it's a financing arrangement. If it's below, then is it do they have incentive? No. Okay, no incentive to ask us to buy, then they will keep the asset is an outright sale. They have the incentive means they will ask us to buy. They ask us to buy, then it's a rental. It's below. Okay. Okay. Hmm? So then we have this bill and hold arrangement. Means we sold the goods. We sold the goods. However, they ask us to keep the goods first. So we bill them and then we hold the goods for them. Okay. So there are two types of income here. When we sell, we bill them, but the goods because probably it's a discount period or whatever. I mean, it can be a package. Okay, my customer, okay, you buy now, I give you more discount. So yeah, they want to buy now, but the problem is I deliver now, they got no place to keep. So they say, can keep at our place first lah. We help to keep for them lah. So can lah, but you must pay me rental. So we have the sales and we have the rental. Okay, so it's two obligation here. Okay, so this we have example here. Presentation you can ignore. Not your disclosure can ignore. This one also presentation disclosure. Okay, now we look at the performance obligation satisfied over time. Step 5. Remember the step 5? We recognize. So when do we recognize? It can be depends lah. Obligation will be satisfied at a point in time or over time. So we have two methods. One is output method. One is input method. Output out is like your sales. So it's normally sometimes called referred to as sales method. Out, sell. Input method is when we buy, so in, so that's why it's also known as cost method. So two methods. Here, this is statement of financial position. This is a format. This is SFP. This is SPL, sorry. Just now it's SFP, this is SPL. Sales, cost of sales, and profit. So to determine your sales, your cost, your profit, we have two methods. Then your SFP, this is the format. So we have a cost to date, cost to date means the cost you have incurred until now. Assuming you have a project for 3 years, so we want to calculate the cost that you have incurred until the 31st December. Okay, cost incurred to date. Assuming you have incurred 1,000, this for SFP, and the profit recognized is 200. We have incurred 100, we recognize 200, so cost plus profit, what do we get? So at this level here, normally any losses here, any recognized losses we ignore. So what is this 1,002 here? Cost plus profit. The total 1,002 is actually the sales, correct? Can So cost plus profit is actually the sales. So this is the total cost incurred. SFP is always the cumulative, the total, cumulative. So the total cost incurred, it can be project 3 years. If you are in the second year, means we are talking about first year and second year. Cumulative to date. SPL is always on a yearly basis, not cumulative, yearly basis. SFP is cumulative, means the total cost incurred to date, first year, second year. The total profit recognized to date, first year, second year. And then when this is our total sales, okay, to be recognized, and what happens is less receivable means amount invoiced. So let's say I invoice them only 1100. Based on the work done, the cost incurred plus the profit to be recognized, I should recognize 1,002 in my book. But what happened is I bill them only 1,001. I bill my customer 1,001. So when I bill them 1,001, I still got 100 haven't billed. So this is what we call contract asset. Amount due from customer. You saw this in your financial statement? Amount due from customer. Right. This one. Correct. Yes. Presented under current. Huh? Current asset. No. Short term. Sales. This from your sales you're gonna bill. It's not receivables, it's a contract asset. Receivables is here. Now, how much I bill my customer? 1,1. Should be 1,002, right? Because then my cost incurred, the profit recognized, I should be billing my customer 1,002. However, I bill only 1,001. So when I bill my customer 1,001, the maximum they will pay is 1,001 because it's based on how much we bill. So if I bill them 1,001 and they pay me only 950, so my receivables is 150. Understand? This total. I bill them 1,001, and customer will pay us based on what we bill them. You must pay me 1,001. So what happens is they pay me 950. So means I have a receivables of 150. The 100 is unbilled. Means I will bill them 100 later within 1 year. Okay, when I bill them, then of course now they owe me another 100. Okay. Yes, it can be like this. IFRS page 165. It can be like this. Okay, everything remain the same. Okay, I bill them 1,280. This is a contract liability, overbill. You see, because we have two methods here. One is sales method, one is cost method. So sometimes later we look at it, some of this method here. You know, the contracted take 3 years, 4 years, how much should I bill my customer? I don't wait until, let's say I help them to build highway, 3 years. I don't wait until year 3 only, I build them one shot, 20 million. So over the year, I'll continue to build them. And how much should I build them? Use one of the two methods, output and input method. So the cost incurred and how much I build them cannot be parallel. I mean, as in similar. So sometimes we may overbuild them, sometimes we may underbuild them. So that's why we call it contract asset, means we underbuild them. Okay, probably later we look at some example, you see the difference. Huh? Because we build them, okay, we build them based on, let's say, customer, the certified method. Okay, so based on the certified method, yeah, we should be billing them 1,280. But when we use cost method, the cost incurred is only 1,2, including the profit. Okay, there tend to be some differences here. Estimation of it. Okay, so 1,280, I bill them. They pay me 950, let's say. So 50,330. So they owe me 330. Then I bill them 180. Assuming they pay me 95. Okay, so never mind. This is just the format for you to understand why this plus this for SFP. So we're going to look at one example now. Then we see how. Okay. Question 6. Question 6, page 168. So the final contract price is 100,000. The total contract cost is 80. So estimated final profit is 20,000. So this contract here we sign, and this is the profit. Okay, we call this the contract price, the contract cost, and the estimated. And then we start the construction. And other information, cost incurred to date. Year 1 is 40, year 2 is 60. So this is over 2 years. Amount invoice. First year I invoice 48, second year I invoice in total 70. Meaning if you look at here, cost incurred to date, year 1 40, year 2 60. Means year 2 I incurred how much? I incurred 20. Year 2 itself I incurred 20. Because it is cost incurred to date. Until now is 40, until now is 60. Means year 2 I incurred another 20. So for amounts invoice, cumulative also, I bill them 48 in the first year, cumulative. Year 2, I bill them cumulative 70. Means in year 2 itself, I bill them 22. Okay, so this one cost incurred today, we use the cost method. This is the outcome. No, sorry. This is a contract, the outcome here. Contract price. How much? CTT is contract. Contract price. Of course, it's given here. I just show you the steps. Normally, you have to find the contract price 100,000. Cost incurred to date 40. Okay, first year. This is the outcome for first year. So based on the contract cost, which is 80, what is the cost to completion or cost to be incurred? Cost incurred to date, year 1, 40. Yeah. Cost to be incurred, 40. Because the contract is 80,000. Already incurred 40, to be incurred another 40. So total will be 80. The profit will be 20. Actually, it's the same as this. You know, because the question, if they do not give you this, assuming they don't give you this, they give you all this info, 100,000 and 40, and then they tell to be incurred, then you have to arrange it this way. So eventually it's a 20 line estimated profit. Okay. And using cost method, cost or what? Cost is input, right? Cost or input method. Okay, what you have, you're gonna have year 1 and year 2. So you adjust your space here, year 1 here, year 2 here. Okay, cost or input method. Okay, how much have I incurred? Cost method, we look at the cost. Huh? Year 1, year 1. Okay, so we want to recognize the profit. Profit will be the cost incurred to date. Yeah, the format. Input method, cost incurred to date divided by total cost. $40,000 out of the 80,000 cost. Then, how many percent have I incurred in total? So this is to find the percentage of completion. Percentage of completion. We have completed 50%. Cost method. So if we have completed 50%, we will recognize 50% profit from here. 50% incurred, 50% profit to be recognized. 10. So SPL. Later we have SFP at the bottom. SPL will be sales, cost, profit. Year 1. What is my cost? 40. Profit? 10. Therefore, missing figure, sales. $50. Okay. So this year, my sales will be 50,000. I'm going to recognize 50,000 in my book. And 40,000 is my cost and my profit this year. 50% complete, recognize 50% everything. And SFP, follow this one. Cost to date plus profit less receivable, less amount invoice than your contract, asset or liability, and then the receivable. Here, cost incurred to date. $40,000. Profit recognized to date. SFP is all cumulative total. 10. So cost recognized, cost incurred, profit recognized. So my sales to date I recognize will be 50,000 here. Say, but how much I bill them in the first year? I bill them only 48. So this is the amount invoice. Sometimes we call it the progress billing. Progress billing. Amount invoice or progress billing. I bill them 48. So 2,000 is my contract asset. Okay, so current asset. Then I'm going to add in this one, assuming trade receivable. I bill them 48 in total first year. This one just additional, assuming I receive 45,000 in the first year. So my customer still owe me 3,000. Contract asset, trade receivable, both current assets. This one I just add in. Yeah, 48. This is the hypothetical bill. Just plug any figure. Okay, 45. First year, done. Second year, same thing. We must first determine the outcome because this is first year outcome. Second year, contract price. If no change, then 100,000. Cost incurred to date, second year, 60. Means the remaining cost to be incurred, 20. Estimated profit is 20. This one just for practice. Of course, it's the same. Okay, because later when the question, they just give us the cost, total cost, or they just give us cost incurred to date and the total cost. Means we need to know the 20,000. Yes. Which one? No, first we calculate the outcome first. Now second year. So there's the cost or input method. We want to find the profit to be recognized. What's the cost incurred to date? Out of 80. So now I'm about 66.7% complete. So the percentage is, 75%. 75% complete. Means I can recognize 75% based on cost method. So 15,000. So second year, SPR, sales, cost, and profit. We have cost. How much is my cost to be recognized in second year? 20. Okay, because total is 60. Last year already in total recognized 40. So this year only 20. Then the profit 5. The total I can recognize over the 2 years is 15. Last year already 10. So this year recognize 5. Therefore, the missing figure will be the balancing figure lah, is your sales. So 25. So SPL year 1 and year 2. What we have here is the cumulative 15. Then SFP, SPL is for the year, and SFP is the cumulative until this year. Now we are in the second year. So the cost incurred to date, what's the cost incurred? 60. Plus the profit recognized also to date. To date. SFP is your SFP, your balance is the total, cumulative 15. So in total, I would have, 75. Total sales recognized is 75. Then what's the amount bill? Here. The cumulative amount bill is 70. Or something we call it the progress billing. Progress billing bill amount invoice 70. So I still got about 5,000 yet to invoice. Yeah, this is a contract asset. Means I can still bill them 5,000. Trade receivable. Now this is additional info lah, assuming trade receivable. Total bill 70. Assuming they have already paid us 67,000 lah. Yeah, 68 lah. Want to be different from this lah. Later you thought every year 3, right? So 68 then 2. So I got contract asset 5 and trade receivables 2. This is cost method. Yes. $20,000 to can also either way lah. Not fixed lah, but normally we since I follow the book this way. Because after all, when you use 20 out of 80, the profit to be recognized, you still need this figure. Because this 60 you can get it from here as well. Either way. Okay. Alright. Question 7. This one using the output method, sales method, work certify method. Final contract price 1,2, total contract. So we sign a contract, which is the total profit is this much. Other information, work certified to date 60, 80, cost incurred to date, and amount invoice. So year 1 contract price, the outcome 120,000. Cost incurred 39. Just now I wrote there cost to be incurred, cost to completion. Same lah. Cost to completion 51. Cost incurred. output or the sales method. So the profit to be recognized to date based on sales method. We call it based on the work certified. Work certified 60. Out of contract price. Okay. Okay. Work certified today. Means when we construct the highway, okay, so we ask the architect, okay, can you please certify how many percent has been completed? Okay, now they say 50% completed. Okay, it's not based on how much we incurred, but it's based on the architect's, correct judgment or confirmation on how many percent we have already completed. So when they say, yeah, we can bill them 60,000, this certified 6,000 out of the total bill of 1,2. Means the percentage of completion is 50%, but this time it's based on the sales. Earlier it's based on cost, how much we incurred. This one is based on book certified, how much we can bill them. Certified complete is 60 out of the 1,2. 50% complete. So basically, this is to calculate percentage of completion. How many percent has been completed based on sales. So 50% completed out of the profit. Yeah, we can now recognize 15. So year 1 SPL sales cost profit. So profit is 50. Sales is 60. Then work certified is your sales method. Correct. So find missing figure, or we call that the balancing figure 45. Okay. SFP. SFP starts with cost incurred to date. Total to date. 39 or 45. Just follow the term here. Cost incurred to date. 39. Not you don't take 45. Plus profit recognized 15. 54. Cost plus profit, I should be billing them 54. So amount invoice or the progress billing. $48. Six. Contract asset. So add in also lah. Let's say there's a trade receivables. How much here? Yeah, I bill them 48. This one anything lah. I receive 46. Assuming 46, so 2 is my trade receivables. Because we must reckon this is how much we recognize incurred. Okay, so we must recognize how much we incurred and how much we the profit. Cost incurred plus the profit recognized, so we should be billing this only. Okay. Second year. The outcome 120. Cost incurred to date 49. Cost to completion 41. 90. Estimated profit 30. Profit to be recognized based on sales method. So work certified 80 out of the total contract price 12. So this is a percentage that we have completed, percentage of completion. $20,000. Okay, continue. We continue now. SPL year 2. This one year 1, this one year 2. Sales, cost, profit. Minus 50, 5. Sales method, find sales. How much? Invoice amount 70. So it's a contract liability. Trade receivable 70. Let's say receive 65 lah. Okay. No, just an example lah. The one in blue is, I mean, I just add in the 46 and the 65 is just not from the question lah. Example. If given, then this is what you do. Minus out. Okay. Okay, now we audit answer number 8. Because answer provided lah, just quick one. Go back, you must try lah. So the business of Santolina, same page. Is a construction contract. The main business. And the end of September 20x3. September, there's an incomplete contract on the book, details of which are as follow. So the date commence is 1st of April, x3. Our year end is September. So the expected completion is December. So we actually cut through the next following year. So you continue through next following financial year. We close on September. Okay, completed next financial year. Of course, calendar year will be same calendar year. Okay, same calendar year. But financial year is 2 different financial years. So we close in September. Okay? Okay. Total contract revenue is 29. Cost to 30th September. So this is the total cost incurred to date, 210. Value of performance obligation certified. So work certified is 23. Amount invoice for the work certified. Work certified invoice 21. Cash received is 194. Estimated cost to completion is this, 26. Santolina calculates satisfaction of performance obligation based on work output method. Sales method, as a percentage of contract price. Prepare calculation showing the amount to be included in an SPL, SFP for the year in respect of the book. So what's the first thing we need to do? The outcome. So the outcome will be the contract price. How much? 290. Cost incurred to date, 210. 450. There. And estimated cost completion. Yes, 2600. All right. Hmm? 231050. 58950 is the estimated profit. Yes. Amend which one? 2 financial. Okay, we want to. Okay. We look at the total first. Okay. Earlier also we look at the total contract outcome. This one is here. Is year 1, year 2. In fact, year 1, year 2 also haven't completed. So this contract here is more than 2 years. So we look at the total first, and then we look at the as of year 1, work certified is 60 out of total contract. Okay, so in the first year it's half completed already. So what we do now is the total, and based on sales method or work certified method, so it will be profit equals to what? Yeah. is to recognize the profit using sales method or work certified method. It will be work certified. So means the architect have already certified, or the before that the CS, the quantity surveyor, QS, they have already certified. They certified. Amount invoice, no, book, so yeah, 230. Out of 290, they confirm 29230 out of 29. So this is the percentage of completion. Therefore, based on this percentage, the profit can be recognized will be 46753. It is a profit. $46753. Then to sales will be the work certified. 230000. So find missing figure. 183247. After that, SIP. Cost incurred to date 210450. Profit recognized to date 46. So the cost incurred, the amount I make a profit recognized, so I can bill this much, 257203. And how much I bill? Amount invoice 210000. Yeah, first yeah. 47203. Contract asset. Trade receivable, I bill 210000. Cash received is only 194. 16,000. Done. You invoice later. In this case here, of course, towards the end, you will recognize. I mean, you will bill. If you have over 3 years, probably the second year you may bill more, bill less over. Okay. So basically, you go back, repeat the same thing, and then you can apply it. You can look for the information. So, outcome, how much profit to be recognized, especially be careful when it's the second year or third year. Remember to minus the previous year.